Good day, Junior Techies. I'm Mrs. Brimacone, and in this activity, we are going to focus on the financial indicator solvency. Now, what is solvency? With solvency, we ask the question, can the business pay off its debt? In other words, is the business solvent? So when we're looking at this, we look at, does our total assets exceed our total liabilities? This ratio is always 2:1. If the business is solvent, it means that our total assets exceed our total liabilities. If the business is insolvent, it means that your total liabilities exceed the total assets. When we're commenting, we will look at, for example, if the ratio is 5:1, we would say for every 1 rand of debt, the business has 5 rand of assets. So when we're looking at this financial indicator, please make sure that you study your format of your financial statements. Know what does your non-current and current assets consist out of. The same as with total liabilities. What does your non-current and current liabilities consist out of? Required of us, calculate the solvency ratio for 2022. Comment on the solvency ratio calculated above. Should the company be happy? Explain, quoting financial indicators to support your answer. So here they provided you with the solvency ratio for 2021. Always remember when we're commenting, we compare last year with this year. We indicate, was there an improvement or not? Did it increase or decrease? And then we provide our opinion. To calculate the solvency ratio, we have to take our total assets divided by total liabilities. This means your non-current assets plus current assets. When we're looking at liabilities, non-current liabilities plus current liabilities. Again, my ratio must always be 2:1. So for example, if you notice that the total assets is less than the total liabilities, do not suddenly swap the ratio around and say 1:2, for example, 4. When we're commenting now, we have to compare last year with this year. So although the solvency has decreased, you can see that it's decreased from 3,2 to 1 in 2021 to 2,04 to 1 in 2022. Although it decreased, the company is still solvent. That means that our total assets exceeds our total liabilities. For every 1 rand of debt, the company has 2 rand and 4 cents of assets. The total assets, as mentioned earlier, is higher than the liabilities. To conclude, this means that the company shouldn't have any problem in paying off all the debts. When you're practicing financial indicators, always remember to work backwards. I always say from the beginning to the end and from the end to the beginning. Example, if you need to calculate the total assets and they provided you with the non-current liabilities, if we use the ratio 2,5 to 1, to calculate the total assets, we're going to take the total current liabilities and times 2,5. Example number 2, if they provided you with the total assets, so we took the non-current plus the current, and we need to calculate our total liabilities, and the ratio is 2,5 to 1, it means now we're going to take the total assets, which is 3.7 million, divided by 2,5, and that will provide us with the total liabilities. So the solvency ratio, again, what is this all about? Can the business pay off all its debt with its total assets? Do not confuse this financial indicator with financial risk when you talk about the debt equity ratio and gearing. This is what we're going to look at later on. Thank you very much. I want to leave you with this quote. Note to self, winners aren't who never fail, but people who never quit. Next, we're going to look at all our return financial indicators with regards to companies. I hope you have a wonderful day.